You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 7th of March, 2016. What do we see happening at the close of this last week, ending the 4th of March? We see a crossover going up on the big weekly chart. Just to give you sort of a preview of what we're about to do, we're going to cover the three big indexes we look at. That is the IYY total market, the S&P 500 is depicted by SPY, and lastly QQQ, which is the NASDAQ 100. We're going to look at the weekly charts on each, and we're going to look at the daily charts, sort of see what happened throughout the course of the week, and we're going to look at gold in both of those time frames. So we see that we have a crossover, and whenever we see the MACD, the moving average convergence divergence, crossover in a direction, and at the same time that cross is paralleled by the derivative oscillator, that usually gives us a good feel that that is something that is going to continue in that direction. Whenever we have derivative oscillator pairing up with our MACD, we like to see that. Well, that's what's happened. 3 weeks of total up movement in the market, open green boxes on the weekly chart, but this is the first time that we've had the MACD crossover and the derivative oscillator. So we're going to look for continued up movement happening with that occurring. Now, let's look quickly at what went on throughout the course of the week. Again, we're using our Hinki Iashi type of candlesticks, which are different than the regular ones. If you aren't aware of how that works, go to our website. Check that information out. We like that type of candlestick better than just your standard Japanese candlesticks. What do we see happen? Well, we saw on Monday the market was down a little bit on our candles and then surging up over the next 4 days, ending the week up on Friday. Now, if we go back to our weekly chart and we go to the S&P 500, what do we see? It too, just like the total market, crossed over along with the derivative oscillator. If we look at what's going on the daily chart, it not quite as much down movement, more of just sort of a digestion, a lot of indecision whenever we see a doji. That was on Monday, the 29th of February, last day of the month, and then Tuesday, Wednesday, Thursday, and Friday, upward moving candles. All 4 of those days, again, crossed over on the daily chart way back on the 12th of February, and it has continued to move up, some sideways sliding, a little bit of down move around the 23rd and 24th of February, but the market has consistently been moving up, and of course closed above the 2-day trend line. That's where we are on the S&P 500. Now again, let's take a look at what is the NASDAQ 100 doing as depicted by the Qs. It's not yet crossed over. Derivative oscillator's losing some speed on its downward momentum, so it's moving up, and the MACD is moving toward the signal line, but not yet crossed over. What do we see on the daily chart? You see the movement a little more sluggish in the NASDAQ 100. Again, a doji on the downside on Monday. Tuesday and Wednesday up movement, a red open box down movement on Wednesday, and then up movement on Friday, still above the 2-day trend line, crossed over originally on the daily chart back on the 16th of February, but no crossover going up yet on the big weekly chart. That is where we are in our big indexes. Now lastly, we're going to range out on the weekly chart and take a look at gold. What do we see going on with gold? Well, gold crossed over on the weekly chart back on the 8th of January, sort of slid sideways for 2 or 3 weeks, and then started on its major up moves on the 29th of January. Huge week on, and then again ending. Each one of these weeks I give you, that's the day. That date is the week ending. That was on the 29th. What do we see going on? Well, the week ending on the 12th was our biggest up move of any week so far in the year, and that was on the 12th of February, the week ending then. Then the market slid sideways for the next 2 weeks, and only over the course of this past week ending the 4th of March did we see more up movement. So again, we've been crossed over going up on gold since the 8th of January. Now, if we look at what went on intra-week as via our daily chart, We see on the 29th up movement again on the 1st, 2nd, 3rd, and then the big movement up on the 3rd and 4th as the week ended. Well, that is where we are. Gold has still not yet, though, crossed over on the daily chart. Still has not done that. It's been sliding sideways. Now, that said, remember the MACD, the indicator we love, does not work all that well on a sliding sideways market that's not trending one direction or the other. Hence, it's not yet crossed over. So continue to pay attention to that. Those of you out there who are gold bugs, looks like it might be getting close. Derivative oscillator may also be getting close to moving over on the daily. And of course, when that does happen, then it parallels the up movement on the weekly chart. It's always a good sign and continued upward movement. Now that is where we are on our charts. One of the other features a lot of you tune in for on our weekly review is we look at what moved the market over the last week and then what we see happening in the coming week beginning Monday the 7th of March. Well, what did we see happen this last week? Well, we saw a number of things occur. Strong employment data was put out as far as the U.S. goes. The unemployment report that was put out on Friday showed that we had some job gains in February. Slow wage growth took a hit, dipping 2.2% year over year. But we did see that there was positive data as far as employment goes. We saw that, in fact, U.S. non-farm payrolls rose 242,000, unemployment steady, and wage growth, of course, like I talked about before, dipping. Shale oil production is going to end up being cut this year. We see that Moody's is cutting its outlook as far as China's credit rating goes. China's putting more cash into its system. The People's Bank of China cut its reserve requirement ratio to 17% from 17.5%. What does that mean? That means they're putting more money into the banking system. Brazilian corruption probe widens with a former president finding himself detained by Brazilian authorities for a fraud inquiry. Interesting. The Federal Beige Books report was upbeat. While prepared in advance of each meeting, as far as the rate setting committee goes, investors, after the review of this last week, now feel like they are not going to see, in fact, it may be a long time before we see any kind of hike as far as the interest rate goes. That's not going to happen at the March meeting. And of course, what does it take to fuel our markets? Free money. Production, not so worried about that. Increase in the economy, not so worried about that. But free money to the banks. When that's announced, the market surges, which is what we've been seeing. Eurozone inflation is in the red. Now, what does that really mean? I guess deflation. The consumer prices fell about 0.2% in February, and that's setting the stage for a more accommodating policy, you might put it, from the European Central Bank when their governing council meets later this month, well, actually on the 10th. And the ECB targets at inflation at just above 2%. So again, when you have consumer prices falling, they're not so happy about those things. So what are we going to see happening over the course of this next week? Well, on Monday, Japan's going to release its Q4 GDP. You're going to see China releasing its foreign exchange reserve data. That's going to be paid attention to. On Wednesday, you're going to see the Canadian Monetary Policy Committee is going to meet. Then on Thursday, European Central Bank Governing Council is going to meet. We sort of hinted on that a little bit earlier. And then on Saturday, actually, the 12th, China's going to release its retail sales and industrial production data. Not a lot of things that are necessarily going to be moving the market all that much. Pay attention to what China says somewhat. It's not like we've got Federal Reserve meetings and that kind of data coming out, which really, really pushes our market. But, do pay attention on Thursday, maybe a little bit to what the European Central Bank's doing and what China says on Monday about its foreign exchange reserve data. The more money they pump into their system, the more they're going to try to save it, and see just how that affects our markets, possibly to the positive, the more they dump in and the more they potentially cut their own throats. That is where the market That's what the market did this last week, what sort of affected things, and where we are looking things to potentially move this next week, and the data and the information and news that might move it. So, thank you so much for joining us. Just be aware, again, our total market is in an up move, has been in a strong up move on the daily chart since the 12th of February, and our S&P 500 continues to move up strongly, and the NASDAQ 100 lagging somewhat, has not yet crossed over on the weekly chart. Gold, of course, has been in an up move on the weekly chart for quite a while and had a good week on the daily chart. So thank you so much for joining us. We'd love to hear from you at chartingwealth.com. Go to our website, sign up for our daily newsletter along with our weekly review and forecast. Follow us on iTunes. Give us a 5-star rating if you care about what we do. Say some nice words about us. Thank you so much for joining us from chartingwealth.com.